So, good evening, all of you. Welcome you all in HDFC webinars. Today, we are doing a webinar on bullions. As we saw that last year, 2024, gave a very good return, two-digit return in gold and silver. Gold given almost 21% and silver given almost 23% kind of return, right? And we have also seen that in last year, gold and silver made a new high. Almost silver touched the high of 1 lakh and gold tested the high of almost 80,000. So this year, as this is our first webinar on the product side, so for that we have invited Mr. Sanjay Thakkar from MCX. We will guide you the role of exchange, the role of broker, the role of commodities for the in the market. If I talk about the commodity market, market is very volatile, and recently we have seen that new virus hit the China HMPV virus, right? So if you remember, at the time of COVID, we saw a very huge momentum in gold and silver prices. So again, I'm not saying that it is a very big virus, but yes, definitely it's again giving a threat to the economy. So whenever we saw any threatened or uncertainty, we noticed very high volatility and positivity in the bullion market. However, we have seen the higher dollar index, and this year we are starting with uh, the challenges, new things from the US side also, that Mr. Trump will, take a oath to initiate their administration. So that will be again a new chapter for the US economy and as well as the global economy. And also we have, we will see huge volatility in terms of China, in terms of tariff, in terms of interest rate from the Federal Reserve. So these are the activity where we will see a huge volatility in the market, and the gold is the only thing which will be impacted a high due to this activity. So impacted means the volatility. So we should look after gold and silver in this year also, because as I said that there is lots of event, lots of thinking which will be help to the volatility in the gold, and we will definitely expecting again a good return in gold and silver prices. Not so much return as 2024, but yes, definitely there would be a return because event is there. And also, there is a query from Monica. Monica ji, thank you for writing the message. Yes, this is webinar available on recording on YouTube. If you are not able to join this webinar right now, you can take it from YouTube also. You just subscribe SDFC Securities channel, a YouTube channel, and where you can get all the webinars which we have conducted on the commodities as well as the other products, right? So you can connect with that. So now, commodity, as we have seen that it's a part of the portfolio. 10 years back, people are not thinking about was not thinking about to buy the commodity as a portfolio product, right? But now people are like to buy the commodity product in their portfolio and giving the space to diversify. So if we let's about the gold, there are lots of thinking, lots of ways to invest in gold. However, SGB is there, but we have seen that sovereign gold bond liked by everybody, and people took the main positions in the SGBs. But now we have MCX, where jewelers, traders, small traders, big traders, because MCX gold, MCX bullion has many contracts as per the requirement by the market or the market participants. We have small contracts, gold petal, we have 1 kg contract, gold mega contract. So as per the industry standard, we have all the things. So right now, traders are like to trade in MCX, and even jewelers are like to trade in MCX, and even jewelers are also like to hedge the portfolio. So gold, as we have seen, now it's a part of portfolio diversification and the part of diversification. So this is the USP of the gold, that if you buy the gold, you can beat any uncertainty, right? So I will not take so much time. I would like to invite Mr. Sanjay Gankar from MCX He will guide you the basics and the role of exchange in our life. So over to you, Sanjay sir.
Thank you, Anuj. Thank you very much, Team HDFC. So my name is Sanjay Gakkar. I take care of business development for North region at MCX. I have been with MCX for almost 2 decades now. It is a pleasure to be here because uh, everywhere we go to do seminars or conduct awareness programs, my earnest request to the clients is that you should associate with brokers of repute, so that there is no issue, because financial markets are, though regulated market, but there are people who want to kind of fleece the clients. Therefore, association with a reputed broker becomes very important. So I'm happy to be here. I have a small PPT on the products of which are traded on MCX. So MCX is a commodity exchange with more than 95% market share in the Indian commodity market. So kindly bear with me for 10-15 minutes. Yeah, 1 second. Hope this is visible.
Yes, sir. Yes, sir. Please go ahead.
All right. Yeah. So this is a standard thing that there are broadly 4 types of markets. One is the stock market, which is known to everyone. Uh, then we have debt market and forex markets. Uh, the fourth one is commodity market. Commodity market is very fundamental because manufacturing or value addition or being a part of the value chain has been historically very old. It is the oldest profession, so to speak, to deal in raw materials or commodities. And from this very underlying market, the other markets evolved, but they are kind of interlinked. Imagine somebody who is imagine a company which is a listed organization, but buying or importing raw materials and converting to value added products. For example, importing gold and converting to jewelry. Now the company is in the listed space, so capital market comes into picture. They are importing gold. So whenever you are importing, you are making, you're supposed to make payments in dollars. So forex market also comes into play, and you are dealing in gold, which is a commodity market. So all these markets are kind of interlinked. Commodity market serves a very unique purpose, unlike the stock market. Now the stock market is there are twofold objectives of stock market. One is to raise capital by the companies, and the second is for the investors to make long term returns. Now commodity markets address a very specific need. There is a thing called commodity price risk. Now this commodity price risk is the uncertainty associated with the price behavior of raw materials into future. If you are a manufacturer, you have participated, for example, in a tender. You don't have possession of the raw material. Now the supplies of the tender would start, say, 3 months into the future. Sitting today, you do not know how the price of commodity would behave, and this uncertainty in the price behavior of raw material or commodities poses a risk called commodity price risk. And the companies which are involved in manufacturing or value addition from raw materials to finished goods face this situation every day, the uncertainty in prices. Now this, mathematically you can express the uncertainty in prices by the term volatility. So if there is more volatility, then there is more price risk. So these are directly proportional to each other. And there are broadly 2 ways to handle this volatility. One is to do the spot market transaction. You go and buy whatever you need, and the second is to enter into a futures transaction, which is done on the commodity exchange. Now the prices change, as Anuj said, because of a variety of factors. Uh, Taking the example of gold, now gold is kind of 100% imported into India. We don't manufacture or mine gold in India. We produce some gold by way of recycling, but if you talk about the new supplies, they are 100% imported. So whatever is the price prevailing in the global market, that would impact the Indian prices. Then forex, if the rupee becomes stronger or weaker, that would kind of impact the landed price of gold. Geopolitical factors like Russia-Ukraine war, uh, tariff and non-tariff barriers, including say customs duty. Recently, in the last budget, the government of India reduced the import duty on gold, and the gold prices immediately on MCX reflected that change. So all these factors lead to uncertainty in the prices, and therefore the commodity price risk. Uh, for example, I have two examples. One is that if there is a $1 movement in the global price uh, of gold, the price on MCX would be uh, impacted to the extent of around 26 rupees. And if the rupee becomes weaker uh, by 1 rupee, for example, you are getting $1 for every 84 rupees, and if it becomes 85 rupees to a dollar, the price of gold would be impacted to the extent of 700 rupees on MCX. So these are two very empirical examples of impact of global prices on Indian gold prices and the change in foreign exchange uh, on the Indian gold prices. But the prices which are available on MCX are factoring all these parameters into the calculation. So whatever prices you see on MCX reflect the import duty, reflect the global prices, and reflect the foreign exchange. So the MCX prices are very transparent and very robust prices. There are two types of products on MCX. One is in the futures segment. So we have futures contracts, and the other is in the options segment called the options contracts. So both these segments have been doing pretty well on MCX. The average futures volume on MCX is in the range of 26,000 crore every day, single sided, covering all commodities, including gold and silver, and energy basket, crude oil, natural gas, and then we have industrial metals. And options contracts are also doing pretty well on MCX. The options contracts were launched in 2017, but in the last 3 years, the volumes on options have been tremendously exponential in terms of growth. So we are the third largest commodity options exchange. In terms of options, we are the third largest, and as far as overall volume is concerned, we are the seventh largest exchange in the world. Coming to because this session is on bullion, including gold and silver. We have four variants of gold which are traded on MCX: 1 gram contract, 8 grams, 100 grams, and 1 kg contracts. So four contracts are available for trading. Mostly people who are looking to invest in, say, gold or silver, they start with for gold, they start with either 1 gram contract or 8 grams contract. And for silver, they start with 1 kg contract. Now, 1 gram contract is called gold petal, and 8 grams contract is called gold guinea contract. All these contracts for both gold and silver are compulsorily deliverable, which means that if somebody has an open position till the expiry of the contract, the position leads to deliveries for both the buyer and the seller. Last 5 days of the contract become the delivery days. So if you are standing there into the contract uh, any day during the last 5 days, if you are on the buy side, you will get a delivery. And if you are a seller, the last day you would need to make the delivery. So in that sense, they are compulsory delivery contracts, and there is good amount of delivery which has taken place on MCX. So people who want to invest in physical gold in an account similar to a demat account, which is called Commerce account on MCX, you can do a delivery based transaction also. So gold 1 kg contract is a bi-monthly contract, and rest three contracts are monthly contracts. Similarly, uh, uh, as I said, the last 5 days of the contract become the delivery days. 5 working days of the contract become the delivery days. Then the amount of deliveries which have taken place, say for gold, it is around 145 tons since 2004, since inception, and it is more than 5,000 tons in the case of silver. So good amount of delivery we have seen. Now this reflects confidence both by the entity who wants to deliver, and both by the buyer who wants to take delivery of the metal from MCX. Contracts are standard in terms of quality specs. The gold which is delivered on MCX is 24 karat purity gold with a quality certificate, and all the documents in place. So good amount of delivery we have seen. Investors who want to do delivery based transactions have now started looking at MCX, because as I said, 1 gram contract is also available. As Anuj was saying, in terms of returns, uh, typically, typically the stock market and the bullion market or the gold market are kind of inversely correlated. Uh, you can see there is almost 100% negative correlation between these two markets. So if you want to really diversify your portfolio, gold is kind of must have in your overall portfolio allocation. We also have gold and silver based index futures contract, which is called a Bulldex contract. Now that Bulldex contract uh, is cash settled. There is no physical delivery in the index contract. It is a futures contract with the almost two-third weightage being given to gold and one-third weightage being given to silver. In terms of options contracts, also the exchange is doing pretty well. So we are doing around 1.5 lakh crores worth of notional value single-sided, and around 4,000 crores worth of premium being traded. So people who were used to trade options in the stock market, because whenever you start trading options, the only thing which matters to you as a trader is volatility of the underlying contract, and gold and silver are kind of comparable in terms of volatility in the equity market. So that is one thing. You have additional set of segment to trade as far as options are concerned. People trade in equities, and after 3:30 they come to commodity market to trade commodity options. Now the settlement of commodity options is little different. Uh, on the day of expiry, if you are in the money in the option contract, your position, if so, for example, if you have purchased a call option and you are in the money, I will take an example. You purchased a call option of say 75,000 strike price, and the closing price on the day of expiry of the option contract is say 76,000. You are in the money to the extent of 1,000 rupees, and on the day of expiry, your position would convert to a futures contract. So you would be long one contract in the underlying future contract on the next day after the option expiry. That is how the settlement of the options contract takes place on MCX. And there are certain do's and don'ts. As I said in the beginning, the idea is that you should trade only with brokers of repute. Uh, and if somebody assures you return in the financial market, nobody can assure you return. So if somebody says that he'll give you a short return, you should not believe in that. And whatever transaction you are doing, you should do through brokers who are registered with the exchange and who have certain reputation in the market. So with this, I end my discussion here, and over to you, Anuj bhai.
Thank you, sir. Thank you very much for the wonderful presentation. So let's discussion on the SDFC part. So as SDFC is the member of MCX, so we are providing trading facility on in commodities on our mobile app. So we have two products. One is SDFC Sky, where you can download our mobile app from Play Store, and you can easily access all trading activities through the SDFC Sky app. Right? We have online trading platform on SDFC Sky, where you can do future and options trading through our mobile app, where is the cost is 20 rupees per order. So that is the thing in that. There is a Sanjay sir, there is a question: has commodity trading increased post changes in lot size in FNO?
So obviously that would be one kind of input into increased attractiveness of the commodity segment, because there are contracts whose size is comparatively smaller than the size stipulated by the regulator in the equity market. So that would eventually happen. We have seen tremendous interest from typically equity market players into the commodity market. So there are two reasons. One is that this market is available for longer duration. So if you want to trade or invest beyond 330, you can do it. The second is people who trade for example, options contracts. Uh, for them, the only criteria to take part in a contract is the volatility of the underlying contract. And if the volatility is kind of comparable, uh, for example, in case of crude and natural gas, the volatility is higher than the equity indices. So obviously, there would be a good amount of interest in the participants.
Yes, Sanjay, you are rightly said that there is definitely changes lot size. In as we talk about in gold and silver, there is a mini to micro lot size changes, and in future and options also there is a some changes in lot size. So that is part of the market. As per the physical market, as these are all related with the physical market. So lot size and you know other things are as per the physical market or the equal to the physical market, because there are lots of physical trader who are doing trading, who are doing hedging in the commodity market. So please post your question here. We will discuss questions in the discussion also. So now I'm talking about that HDFC Sky, where you can do online trading through mobile app. You can download our app from Play Store, where you can do trading online as you are doing in you can do the online trading, right? Another product is the invest site, which is a traditional product where you can do trading with a call and trade desk. We have a call and trade desk at Mumbai, where you can put your orders. If you are an old customer of HDFC Sky, or HDFC Securities, you can do commodity trading through the invest right by placing your order through the mobile app. We have very big call and trade desk team where you can just call, dial the number, your call automatically connected with our dealing team, and you can put your order. The number of the dealing desk is the 022 6246 5555. Right. So this is our mobile number, landline number where you can put your order. But for online, the trading platform, we have SDFC Sky where you can do trading online. For the Invest Right customer, we are launching very soon commodities on our Invest Right app. Probably, the mid of the Feb. We are all the things at place, and very soon we are trying to launch this product on InvestFight app, so you can easily trade in InvestFight. But till you have to call at our mobile desk, our commodity desk, where you can put your orders. So in the commodity, as I said that there is a lots of scope for the trading, because there is a small contract, there is a big contract, and there is a also the middle contract also. So if you talk about the gold, there is a 1 gram gold petal contract. There is a 8 gram gold guinea contract. There is a 100 gram gold contract and 1 kg gold contract. So for the jeweler side, definitely 100 gram and 1 kg contract is used by the jeweler because they deal in a big quantity. But for the retail customer who want to trade, who want to like to trade or take a delivery, want a delivery, then he can use 1 gram and 8 gram contract, because these are the very small denominations contract, and easily with the lowest margin, right? So margin is almost 11-12% of the total value. So अगर आप देखेंगे तो गोल्ड पेटल का कॉन्ट्रैक्ट का मार्जिन करीबन 1000 रुपीज के आसपास जाता है, और गोल्ड, अगर आप बात करेंगे गोल्ड गिनी का, दैट इज समवेयर अराउंड 7000 8000 के नियर अबाउट रहता है, तो दैट इज अ मार्जिन, राइट? तो उतना मार्जिन पे करके यू कैन डू ट्रेडिंग इन gold petal and small contracts, right? Similar kind of thing for the silver. We have silver mini, silver micro, and silver mega contract. So silver mega is a 30 kg contract, which is generally used by the jewelers, right? Or the producer or the exporter, importer, right? The silver mini and silver micro contract are generally used by the retail traders. The silver mini contract is 5 kg and silver micro is the 1 kg contract. So you can do trading, you can hold this value in your demat account, and you can also take a delivery from it. So there is a feasibility or the facility to take or give delivery through the exchange also. So physical delivery option is there, and even if you want to do just trading buy or sell online, there's also a facility is there. So we are saying that if you like to trade in gold and silver, you can use initially start with the mini contracts, because these contracts are easy to trade. We have few questions. One question is that can we use Sky and Invest on the same? No. Invest and Sky are two different mobile apps. Investites जो है, that is for our old customers who are the trade through the Investite. And Sky is our totally online system where there is a no RM facility, DIY, you can say that, right? So Sky and Investate are different, mobile app, but you can use on same mobile. So there is a no issue. If you have both apps, you can run both app in your same mobile, because it requires a different PAN number, different mobile number, and different email ID for the login. But you can use both on a same mobile. Thank you, Bharatji. Which is better, InvestSite or Sky? So both are very good apps, right? But InvestSite पर अभी commodity नहीं है. So if you want to trade in commodity, you can use our Sky app, right? You can shift your client code from InvestSite to Sky. For that, you have to close InvestSite account and open at Sky. Does SSC Bank provide bullion trading physically for bullion dealers in market? Yes, HDFC Securities provide the physical delivery. If you want to take a physical delivery, we have to open a demat account with the exchange, and we will provide you the physical delivery system. You can take a delivery from the delivery center, right? So that is an opportunity that you can do trading in the by using the HDFC. Thank you, Devesh ji, Devansh ji. तो अगर आपके पास कोई क्वेरी आप इसमें पुट करते जाइए, वी विल टेक अ अच्छा संजय जी, एक क्वेश्चन था मेरा कि जैसे इक्विटी मार्केट में वी हैव निफ्टी एंड बैंक निफ्टी, तो कैन वी डू इंडेक्स ट्रेडिंग इन कमोडिटी, इंडेक्स ट्रेडिंग इन बुलियन?
Yeah, yeah. So, as I said during my presentation, we have a product called Buldex, which tracks the. It is a very simple product compared to the equity market, where the number of underlying contracts is pretty large. In Buldex, you have only gold and silver. So two-third is gold and one-third is silver. Every year the weight is, so there is the rebalancing happens only once in a year, and the weight remains, the weights of gold and silver kind of remain constant throughout the year. So assuming that it is two-third gold and one-third silver, so whatever movement happens on gold and silver is reflected in Buldex, and it is a cash settle contract. So people who are kind of worried to take, who don't intend to kind of get into delivery based trades, can look at Buldex. It is an excellent product to trade. Yeah.
थैंक यू संजय जी. कैन वी डू, संजय जी, वन मोर क्वेश्चन है, कैन वी डू ऑप्शन ट्रेडिंग इन बुलियन, बुलडेक्स, जस्ट लाइक
No,
निफ्टी और बैंक
options
निफ्टी?
options are yet to start. So it would take some time, but so far we have only futures.
I think this is a cash settle contract, huh? Just
Yeah,
just
yeah,
like
yeah.
Nifty and Bank Nifty.
Yes,
Okay.
yes.
So Bullion Index, Bulldex, you can say, is a very good contract, just like Nifty and Bank Nifty. If you are trading in equity mass segment and trade the index, so you can trade Bullion Index in commodity as well. As Nifty and Bank Nifty are cash settle contracts, so Bullion Index is also cash settle. Means if you don't want to take delivery gold and silver, right? And if you want to play both things, as in index, suppose if we are trading in Nifty, so Nifty may we can say that if we take a position in Nifty, so my amount is invest in all Nifty 50 stocks. So just the similar kind of thing. If I trade in Bullion Index, my money automatically invested in gold and silver because these are uh, index of the gold and silver. So gold और silver को मिला के index बनाया गया है. तो अगर मैं bullion index में invest करता हूँ, it means कि I am taking a leverage from gold and silver from both. So that is a cash settle contract, and there is a no physical delivery in that segment. So you can choose Sky Bullion Index and the Bullion side contracts by using HDFC Sky and the Invest Right. So please ask your question. If you have any question, you can.
So one question is about option expiry week time.
Right.
So the expiry day of or the date of options for gold and silver is linked to the expiry of the futures contract. So as I said, future contract is a delivery based contract. We kind of deduct 5 days for deliveries from the future expiry, and then we give another 2 days for people to exit. So आप imagine करिए, Monday to Friday is the expiry of the futures contract. So coming backwards, Saturday, Sunday is a holiday. Thursday and Friday are given for positions which have converted to futures. So Wednesday becomes the expiry day for the option contract. So if your option contract expires in the money, and so Thursday your position would reflect in the future contract, and because futures have margins applicable to it, the applicable margin will also be applied to your position which expires in the money. So that you have to. This is a very good question actually. Manish ji ne पूछा है. So if your option is expiring on Wednesday, the and if it is likely to expire in the money, your future contract margin would start applying on from Tuesday. So Tuesday, Wednesday, and Thursday. On 3 days, the entire 100% margin would apply. 25% on the first day on Tuesday, 50% on the day of expiry, and remaining 25% on the next day, which is like Thursday. So that is how this staggered option position margin gets converted into a future position, and there is no fixed day for expiry. As there are expiry days for equity market, we don't have a fixed day of the week. It is linked to expiry of the underlying contract. Thank you.
Thank you, sir. So the another question is the process of physical delivery for gold and silver.
So as I said, it is a compulsory delivery contract. If you continue with your position in the futures contract, for example, if you are trading in futures contract and you have done a buy transaction, whether it is 1 gram or 8 grams or 100 grams or 1 kg, it is margin based trading. Last 5 days become the delivery days, and every day there is incremental margin of 5% apart from the initial margin. And if the seller delivers the material on say Monday, it will be given to the buyer on Tuesday, and money will be taken from the buyer. So that is how the transaction takes place. Buyer will get the material on Tuesday, seller will get the money on Tuesday, and seller will get the details of the buyers to raise an invoice, because it is a GST based transaction. The MCX price plus applicable GST becomes the invoice.
Thank you, sir. Thank you very much. Manish ji asked one more question. 1 gram future contract cost how much and how much time we can hold? Sanjay sir, there is a question.
Yeah. 1 gram future, ये वाला.
Yes, sir.
So आप assume करिए कि 10 grams ka gold is say 75,000. 1 gram would be 7,500 rupees. That is the value of the contract. And if there is a 10% margin, now the margin, applicable margin is visible on the MCX website every day. So there is, if you go to the MCX website, you can check the applicable margin. Assume that it is 10%. So you would, for margin, you would need to pay 750 rupees to the broker. And then there are exchange charges and broker charges. And there is a CTT if you are on the sell side, commodity transaction tax. But if you are only buying, there is no immediate commodity transaction tax. So 750 rupees would be the margin, and your position would be created. So it is very easy. Indirectly, Manishi, it is a very good question for somebody who wants to enter in commodity market. This is a very low way to kind of learn about it and enter into this market. By paying 750 rupees or around that number, you can start trading in MCX 1 gram gold contract.
Thank you, sir. Thank you, sir. Please ask your question. कोई आपका question हो तो we can address.
There is one question from Manjula ji. Is there a limit for selling commodity? See, in terms of, if you go to any contract specification on the MCX website, there is a parameter called open interest limit. So open interest limit is the total quantity for which you can have the open interest. So if it says 4 tons, all gold contracts, you can have position to the extent of 4 tons. But for somebody who is starting afresh, 4 tons is a huge quantity. Normally, even a corporate would not kind of have that kind of position. For a retail client, it is very difficult to touch the higher number. And for how much time we can hold a contract? So you can hold the contract. So there are two intentions. One is to take delivery. If you want to take delivery, I am assuming that you want to hold the position on the buy side. And if the intention is to take delivery, you remain in the contract till the expiry of the contract, and delivery will come to your Commerce account, which is similar to a demat account. But if you don't intend to take delivery, it is better to either come out of the contract or roll over your contract before the actual delivery starts. So don't stay in the contract in the last 5 days if you don't intend to take or give delivery. So as I said, if the delivery is from say Monday to Friday, the previous Friday is the last day for non-delivery transaction, so to speak. So and you can hold the position till the expiry of the contract. It is not perpetual, so to speak.
Thank you, Sanjay sir. Thank you, Manish ji. Yes, Sankaran ji, these video is available on YouTube. You can subscribe HDFC Securities YouTube channel where these webinars are all available. You can hear or watch this recording through the YouTube also. I'm taking 1 gram delivery, then I have to 7,000. Yes. If you want
If
to
7,500 is the rate, then 7,500 plus GST.
Plus GST. The 3%
Plus
GST, na?
plus 3% GST. And if you want to hold it in the MCX vault, then the rent is to be paid, which is very negligible amount, but still you should take that into your calculation, because we are kind of holding your gold in the MCX vault. If you don't take it out, obviously the client has to pay rent for that. That rent is less than 0.5% on annualized basis. So it is very insignificant, but still you have to pay.
Another question is that, no, sir, it will not show in your equity holding because for the commodity, there is a different demat account, which is the Commerce account. You have to open a separate demat account and it will shown in your that demat account, not in equity account, right? For the commodities, you have to open a different demat account with the exchange called as Commerce.
One question is, what is the expiry date? So for gold, regular the expiry date is 5th of the month for which it is mentioned. Agar, for example, if it is 5th of April, then 5th April is the expiry date. It is mentioned in the contract. And for other contracts, other than the 1 kg contract, last day of the month, last working day of the month is the expiry date.
Sankaranji, you have investor account? No, you have, if you want to trade the commodity, you can just call at 02262465555. This is our call and trade desk. You can call and put your order. But if you want to do trade online by yourself, your mobile, you can close your invest right and trade open in HDFC account, or you can wait for the while because we are expecting to launch a commodity on our platform at the end of Jan, right? So you have to wait for few days. We will very soon launch on invested account also. Still, you can call and you can use call and trade desk. Call number is 02262465555. This is our number. You can call and put the trades. But on the Sky, this Sky, you can download the app and start trading. Mention the number in the chat box: 02262465555. Sanjeev, if you want to say anything, or should I conclude the webinar?
You can conclude, Anuj.
Okay.
It is a very nice.
So थैंक यू वेरी मच, आप हमारे वेबिनार में आए, और सभी व्यूअर्स का बहुत बहुत धन्यवाद कि आप हमारे वेबिनार में ज्वाइन किया, एंड थैंक यू वेरी मच, थैंक्स अ लॉट। थैंक यू संजय सर।
Thank you.